I'd go anywhere, anywhere with you, 'cause you fill my mind, oh, you fill my mind. We could build a dream, start up something new, and the world is on your shoulders, and you feel like falling over. Just let me in your head, so I can be there for you, there for you. The night is young, won't you sing for me? Won't you sing for me? Till we fall asleep.
Well, everybody, welcome to VC Masters on the Pod TV network. I'm Nick Pellavito. I'll be your moderator for today's show. And today's show, we're going to look at IPOs, initial public offerings, and there are three big ones that are about to hit the market. The one you're probably familiar with, of course, is SpaceX. They're anticipating the valuation to be over $1.7 trillion coming out of the gate, which is going to be the biggest IPO ever. But then there's Anthropic, which is going right behind it, although it's having some political issues. And then, of course, there's the OpenAI ChatGPT. So we've got three big IPOs. And the real question, of course, is how is it going to affect all the other people who are doing IPOs out there or potentially doing them? Now, with that, we have in VC Masters, the VC Master himself, a professor at Duke University, and also head of the Azimuth Opportunity Fund, none other than the star of the show, Dr. Salman Azar. Dr. Azar, I don't know if you're keeping up with the headwinds that are going up there, or tailwinds, or hurricane of IPOs that are about to hit the market space and early in the next couple months. And if they are, they're going to be absolutely huge, things that we have just never seen before. And how's it going to affect all the other companies that are looking to do IPOs out there? So with that, the pearls of wisdom are on your plate and about to drop them on the rest of the world. So Dr. Azar.
It's exactly those three companies, SpaceX, OpenAI, and Anthropic that you mentioned. SpaceX is kind of like almost twice as big as the other two. And that has been kind of making the round recently in terms of the valuation and so on. Just to give you kind of an idea, SpaceX is anticipated at about $1.75 trillion valuation. That's trillion, not billion. Most IPOs are usually in the billions. In fact, we have a word for any company that reaches $1 billion valuation in the venture capital industry. We call it a unicorn because that's a big deal. If it reaches $10 billion valuation before it goes public, we say it's a decacorn. There is like no term that is even coined for SpaceX, which is almost $2 trillion. Another way you can kind of imagine what we're talking about is that when companies like Google and Amazon and Apple, Microsoft, they hit $1 trillion valuation long after they went public, it was a major news. There has been no IPO that has been anywhere close to what the SpaceX IPO is at $1.75 trillion valuation. What that means is that if you invested money in SpaceX when its valuation was, let's say, $1 billion, or let's say 1.75 billion, so it is well a unicorn, you are getting 1,000 times return on your investments. Every dollar you put in is multiplied by 1,000 at the IPO time. That is huge. So I'll get to the other two in a little while, but let's just first focus on SpaceX, and then we can talk about the others, and then we can talk about the impact that hopefully it would have on the markets.
Okay, well, we can look at the other two, and they're coming down the road. One of it is the OpenAI. What are your thoughts on that? Obviously, artificial intelligence has been really big, but also I noticed that SpaceX actually bought one of the AI machines out there. So it's not just space that they're trying to conquer; they're also trying to conquer the world of artificial intelligence. So, what were your thoughts on this IPO coming down?
That's actually very perceptive. Just to kind of complete your thought on SpaceX. SpaceX, most people think about sending rockets into the moon and all that stuff. SpaceX, one of the major things they have is really the internet connection through their Starlink program. You may have heard the word Starlink, or company that if you're traveling on an airplane and stuff, Starlink provides a lot of Wi-Fi on the airplane, but it is able to provide Wi-Fi, or I shouldn't say Wi-Fi, it is able to give internet access in remote areas where you can't run wires and satellite communication is unreliable. It is the most reliable form of Wi-Fi, especially in remote areas. And SpaceX derives a major portion of its valuation. So going down from SpaceX 1.75 trillion to about $1 trillion, which in itself is a huge thing. But unfortunately, with SpaceX almost being double, OpenAI at $1 trillion is not as big of a news as SpaceX is. In fact, when Nick and I chatted a little bit earlier, I thought we were going to, the big IPO, the mega IPO is definitely SpaceX, and kind of like the huge IPO is OpenAI, and then a big IPO is Anthropic. OpenAI's valuation is expected to be about $1 trillion. It recently got some funding that is reportedly around $800 billion. And Anthropic is somewhere a little bit under $1 trillion. It had turned down some funding in order to go IPO. There are a little bit of political headwinds for Anthropic, which we can get into. The summary of those is that the US government has asked for unfettered access to Anthropic's data and AI, whatever queries people submit and so on. And Anthropic has denied that, which is causing a lot of tension because the US government is planning to ban Anthropic for its subsidiaries and its organizations and so on. So we'll see how that turns out, but it is a headwind for Anthropic.
Yeah, the thing is, it looks like they're having political problems, but also it looks like some of these companies are profitable right now, which is kind of amazing because usually in a startup, that's not the situation. Although SpaceX, I believe, says they're not looking for profitability to around 2030. How come and how do these companies get these huge valuations and frankly, not be profitable?
Amazon is kind of the poster child of that. Amazon wasn't profitable several, I think, years, maybe even like decade or so. I've forgotten the exact time that after its IPO, it still wasn't profitable. And the reason it wasn't profitable was that it was reinvesting money back into its growth. So when a VC like me invests in a company, we are not so much looking for profit, we are looking for growth, because the growth is basically what informs the valuation of the company. We would rather have a company that would give us 100 times return on our investment because it grows 100 times and then becomes profitable, as opposed to a company that is run for profitability and doesn't have the growth. The growth and profitability are often strategically in opposition with each other, because let's say if you're a leader and you make certain amount of profit, you can either distribute that profit back to the investors or keep it as cash in the company, but you can also use that to fuel growth. And those are the kinds of things that VCs have traditionally invested in. In fact, during the Amazon years, even the public investors were quite okay with Amazon not being profitable. In fact, they're more than okay. They were happy that Amazon is not profitable because they knew that Amazon can become profitable at any time. So all they need to do is kind of pump the brakes on their growth and use that money for profitability, and we are done. After COVID, we had a spike of inflation. And that spike of inflation has brought attention back to profitability. So a lot of companies that are going IPO now are kind of being forced, I would say, by retail investors to be profitable. SpaceX is kind of an anomaly in that case these days, but it used to be like that was the norm, that companies would go IPO before they were profitable, and they would use the IPO to actually fuel the growth as opposed to reinvest their money. And that's how the IPO kind of fit into the whole thing. So I hope that makes sense, how the growth and profitability kind of oppose each other.
Yeah, it does make sense. And Amazon was not profitable for years. It was like $1 billion in the hole. How they came out of it, who knows, but they certainly did. But here's something very interesting on these IPOs. It looks like that when they're selling, they only sell 15 to 25% of the company. So question number one, who gets the other 85% to 75% of these companies?
So before IPO, let's say that people own $1.5 trillion of SpaceX, and SpaceX sells $250 billion in its IPO. What happens is that everybody that owned that SpaceX before gets diluted. The way the numbers kind of actually, let me simplify the numbers to round numbers, and OpenAI maybe is a better kind of example in this, is that it's going to go public at a valuation of about $1 trillion. So let us say that 800 billion was owned by previous investors, and then 200 million, which is about 20%, they are raising in addition to what they owned. So now their valuation goes up by the cash that comes in, and the percentage of shares go down. You can think of it that kind of like, let's say that I own my home, and actually home not a example. Let's say my home is paid off. Okay, there's no mortgage. I own my home, and I want to get an extension on that home, so I build another unit for my children in my backyard. But now the children own that unit, and I own the home. And the children would own 20% of the total real estate, but there is more value that they added that comes in. The insiders, in the case of IPO, have a lockout period where they can't sell their stock for 6 months, which means that if I am an investor in SpaceX right now, and I hold my investments until the IPO, I will have to hold it for 6 months. 6 months is generally the thing, maybe longer or shorter in some special cases, but 6 months is pretty much the normal thing. So the original investors still own their shares in an IPO. Instead of owning 100% of an $800 billion company, now they own 80% of a $1 trillion company, and the new shares that are issued for that 20%, basically they bring in cash for that, and then this cash is now used to fuel the growth, so they can turn the corner to profitability in case of SpaceX or in case of Amazon and so on.
Okay, now, how do we get to the numbers? I mean, since I'm kind of a numbers guy, I look at valuations of companies all the time, and they sell 15 to 25% of the company for 40 billion, and they say the company's worth 1.75 trillion. How do we get to such lofty numbers when it comes to these IPOs?
If I were to sell my home for $1.75 trillion, as long as you're willing to buy it, that establishes the value of that home. Now, that is far from the value of that home. Even like $1 million is, 1.75 million is kind of an unusually expensive home, unless of course you're in the Bay Area or somewhere. So it is really the supply and demand that determines the valuation. If SpaceX could achieve a $5 trillion valuation and there were buyers at that level, it would have that valuation. If it could only achieve a $500 billion valuation, then that is what it will go IPO at. And these are generally determined by investment bankers. There are a few investment banking companies like Morgan Stanley, JP Morgan, Goldman Sachs, the usual suspects that you've heard of. And what they do is that they basically shop around this to their private clients and have some meetings and kind of try to analyze the company with data that is going to be publicly available later on to determine what price they should go IPO at. They generally try not to maximize the price. So for example, if SpaceX could go IPO at 2 trillion, they would rather take SpaceX IPO at 1.75 trillion or 1.9 trillion, so that after the IPO, it continues to rise. The worst thing that can happen is that they set the IPO value too high, and then people start selling and it tanks, because once it has that downward momentum, it is hard for anybody to kind of pick it up and continue on. So generally, these investment bankers would determine a pricing for you or for SpaceX or companies like SpaceX, and they would then inform SpaceX. Now, if you have Elon Musk on the other side, Elon Musk is going to tell them to go to hell if Elon Musk doesn't get what he wants. So theoretically, most companies would take the advice of these companies but SpaceX has so many suitors for its IPO because it's a huge IPO. And oh, by the way, these investment banks typically get something like 7% of the value. So think of it, 7% of almost $2 trillion. That's a lot of money. That's like billions of dollars. So there are a lot of suitors. And again, it becomes like, imagine you're on the other side of Elon Musk, and Elon Musk wants a $2 trillion valuation, and you're expecting offering 1.75. You will say, okay, screw my ethics. I'm going to let it go at 2 trillion IPO. I'm going to get my money and let Elon Musk determine his own fate.
Okay, which leads us to the next question: is the IPO, when is this going to be? I see the filings are for June, but we have a big problem, is that the investing world is looking at the conflict in Iran. Are we going to see them blast off in June? Because it looks like the market is ignoring Iran. And remember, the investment bankers are under a lot of pressure to put this company on the public market. So the real question to you is this IPO going to happen? And if so, when?
So Elon Musk can tell you when, because in case of SpaceX, he is going to make an autocratic decision when it is going to go IPO. I can tell you a little bit about the companies that I'm involved in. One of the companies was planning to go IPO in July. And at this time, they are holding off on any discussions, any plans on when to go public. Specifically, if I call them up and ask when are they going to IPO, they're going to tell me, call me back later when the geopolitical situation calms down. The reason geopolitical situation is impacting it is not because any of these companies are going to be impacted by the war directly, but the stock market as a whole is impacted by it. So if they go IPO next week and the market falls 10%, it sets that downward trend. And that downward trend, as I mentioned earlier, is harder to kind of pick up. So they are going to likely wait for these big IPOs, or most companies are going to wait for these big IPOs until the market is a little bit more stable. Right now, it is too volatile for IPO for any normal company. SpaceX is not a normal company. OpenAI and Anthropic actually border on being not normal companies because these kinds of valuations are not normal in IPO.
Are we going to see all three of these on the public market in this summertime and this quarter coming up?
So it is highly unlikely that three competing large IPOs would happen at the same time, simply because it's the same group of investors that are going to be investing in all these three companies, because they are all three tech companies in general. And Anthropic and OpenAI in some ways are like direct competitors of each other. So they are not going to go IPO head to head. And I know that from experience. I've invested in a company called Questkey, which is in the same space as Klarna. And Klarna, they waited for Klarna to go public before they went public because Klarna was a bigger company. So generally, size matters in these cases, and the bigger company goes IPO first, and then the others follow. So my expectation on the order is SpaceX, OpenAI, and Anthropic. Now, I have kind of opinion on these three individual companies, particularly between OpenAI and Anthropic, which one is a better investment. And I can share that for educational purposes only, as they say. But in terms of IPO, my expectation would be OpenAI would go before Anthropic. Anthropic would watch and wait OpenAI reaction to OpenAI for, let's say, about a month. If OpenAI maintains its value or goes higher, Anthropic would follow. If OpenAI suffers from a decline, Anthropic would wait until a little bit longer. Anthropic has other options of private investors that can actually keep it private for some time.
Okay, which also leads to the next question. The smaller IPOs, and I guess if you can call the smaller IPOs to be the billion today, the billion to 40 billion, commentators seem to go both ways. They think that this will suck up all the money from the investors, and some commentators say, no, it's going to charge the IPO market. So what are your thoughts? Which way is this going to go? Is this going to reinvigorate the IPO market, or is it going to suck up all the money from the IPO market and the other IPOs are going to be left in the dark?
But both sides are right in this. In the short run, it is going to suck up the money from new investors, and it is not a good idea for smaller companies to go public. But in the long run, you can see that this lays the foundation or the path for the other companies to follow. So typically, if these companies, let's say, have strong IPOs, they maintain their value, other companies would be more encouraged, and the investors also would be more encouraged to continue with their IPO plans. So, for example, if I'm on the board of a company that is considering an IPO in, let's say, $2 billion range, my advice and my vote is going to be, let's see what these companies do, and the hope is that they will open the floodgates and other companies would be able to go IPO. Because right now, a lot of these companies that are like in a few billion-dollar valuations are really scared to go public because they don't want to go public and get hammered after going public. So in the short run, it's going to mean that there is less fund. There are the funding for other IPOs is going to be less, but in the long run, if these IPOs are solid and growing, it will bring more new investors to the market of early IPOs or late stage companies that go public.
Yeah, and the thing is, apparently Microsoft made a huge investment in OpenAI, and they're looking at a huge return prior to it going public. But how do people get involved in investing prior to an IPO?
So that's actually what our firm does, is that we buy pre-IPO shares of companies that are going to go IPO in anywhere from 1 to 4 years. And then we hold on to them. And we also share them with our investors. We have about 70 some investors on our platform. We share these opportunities with them. We also have a fund where they can invest, and then we basically do all the investments, or they can pick and choose the companies they want to invest in. And these are really legal inside deals. I don't want to make kind of like anybody suspicious, but like we have friends in the VC network, and they say, oh yeah, this company is solid, and we are putting in more money, so we would kind of say, look at the company and consider investing in it before its exit. Or we would tell them that we are already invested in this company, and if you're interested, we can get some allocation for you. So it's kind of like I scratch your back, you scratch my back kind of community. Somebody coming in from the outside it's hard to get into the community, because when I get an allocation for another VC, let's say if I get an allocation of $5 million or $10 million for another VC, I'm counting for them to perform. By that, I mean actually ponying up the money to buy this. Because if that doesn't happen, I lose my reputation as a referrer. It's kind of like, my neighbor is selling a home, and I say, I really want my friend to move in to this home. So instead of you putting it on the market, I'll arrange for him to buy this home or her to buy that home. And if you do not perform, you do not come up with the money, then they are left high and dry. The sellers are left high and dry, and they have to now go and do a fire sale because they need the cash right away, and that destroys people's reputation. And the way I kind of broke into the VC market also was kind of taking some small nibbles and proving that I could perform. And I was lucky that I had a friend who was already a VC, and then I went to high school with another VC who basically, I talked to them, and I was interested in VC investing, and it was just the right time because they were raising a new fund, and I invested with them. And that, addressing, when you invest in them, typically a VC would ask for like $1 million commitment over a period of 3 to 5 years. And then they would issue what is called capital calls and say, okay, we need 100,000 of your money right now. and we'll call the rest of the $1 million somewhere at another time. In fact, I am still kind of invested in all these funds that, they issue capital calls to all the partners. I have one capital call that is due, actually it was due yesterday, that went out. And then I have another capital call that's due next week. And if I don't meet these capital calls, I lose my reputation. It's kind of like almost a FICO score, but there's no official FICO maintaining it. It's just a word of mouth. So you have to kind of meet these meet these capital calls. So when we get together and offer this to our investors, we kind of use the same criteria that investors who fund the money are the ones that we are going to ask. If somebody doesn't fund the money even once, we will pony up for them and buy shares for ourselves what otherwise they would have bought. But we are not going to offer them again, because it's like one missed funding opportunity and you're done.
There's also been some movement because Congress has taken note of the venture capital versus the S&P 500, and it looks like the venture capital returns are better than the S&P 500. And so for years, the accredited investors were the only ones allowed. But now the Department of Labor, and by way of executive order, they're going to start allowing retirement plans and individual investors through their 401k to invest in venture capital funds. Is this going to be a game changer when they open up a potential $40 trillion of assets into venture capital?
It is already becoming a game changer, because there are, you can invest self-directed money into VC. And, VCs kind of have public markets for lunch. You can almost think of it that public markets is where everybody shops. And then there is this private club of VCs, or the private markets, that basically we invest in companies that everybody else doesn't have access to. So we beat them like, an NBA team would beat, like Oklahoma Thunder would beat, Michigan if they were to play each other. Michigan being the NCAA basketball champion, and Oklahoma Thunder being the NBA champion. That's kind of like the level of difference. And the feeling, the policy of the security is really not there, because even the public markets can fall, stock markets can fall radically. In fact, when something like, the war happens, the public markets have a higher exposure because they are more short-term investors. We are long-term investors, so it doesn't really impact anything that we are doing in terms of valuations. And then, there's real estate investment, which is everybody's favorite investment. In fact, I was just helping a friend this week who invested in some real estate, and then the interest rates went up, and that kind of crushed the real estate investment. So, all these people that were promising, 15% returns and things like that in real estate, they got taken out to the cleaners, and they are almost like declaring bankruptcy or shutting out their early investors. So it's going to be a huge game changer. We have the good VC can deliver twice the returns that a public market does or more. A bad VC doesn't deliver returns. And that's the thing to be careful of, that people think that they can get up, roll out of bed, and become a VC. That's not the case. Investing, just like any other profession, takes a lot of training, a lot of experience, a lot of knowledge. In fact, in some ways, even more than some of the things that are, other things. You can go to business school and get an MBA degree and become a very good finance executive, for example. But it's very difficult for you to become an entrepreneur or an investor with an MBA, even from a top school like Wharton or Stanford.
Yeah, and I totally agree. And as I tell my clients and my students, I said, look, if it's easy, everybody would do it, but it isn't easy. So we would like to thank Dr. Salman Azhar, professor at Duke University and head of the Azimuth Fund, and our viewers in the United States and across the world, looking at VC Masters and the exciting things are going to look like they're going to happen in the next couple months, especially in the IPO market. We'll see you next week on VC Masters, only on the Pod TV network. You can find us on Amazon, Roku, YouTube, LinkedIn, Facebook, Twitter, Twitch, and almost all social media sites. Till then,
we are going to have a great guest next week, so tune in same time next week.
We'll see you next week. Bye-bye.
I go anywhere with you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is on your shoulders, and you feel like falling over. Just let me in your head so I can be there for you.